In this video, we would be beginning with CMT Level 2 course. This chapter is going to be very simple and this video is going to be short since most of the concepts in this chapter is already known to you. If you wish to watch the other chapters of Level 2, then I've linked it in the description box below. And if you wish to watch the Level 1 playlist, I've linked that also in the description box below. The goal is to turn data into information and information into insight. What does this mean? The price of stocks or the changes in the price movements, that is depicted in the form of line graphs or candlestick charts, right? So the charts which we are seeing is actually the data which is turned into information. Now, as technical analysts, what is our responsibility? Our responsibility is to perceive the information and to convert the information into usable form, that is converting it into proper insight and using it in our personal trading. Let's see the learning objectives of this chapter. Employ a sequence of multiple data intervals to identify trends. So we are going to see how to do multiple time frame analysis. Compare the typical construction of weekly and monthly interval charts. We are going to see how are they constructed. Review challenges related to consistent data sampling using time-based intraday intervals. We are going to also see the lower time frames. Interpret general trend relationship in charts with multiple price data sets. How do you compare two different charts or two different companies' charts? Interpret the significance of data points in a scatter plot. Scatter plot is something which we have done in level 1, but we are going to also see it here. Okay, so let's begin with what are data intervals. So what is data? Data is the changes in price movements, right? And there are different data intervals. That means that there are different time frames using which you can do your analysis. We have the daily chart, we have the weekly chart, monthly chart, 15-minute chart, 1-hour chart, 3-hour chart. If we go on TradingView and if we see the time frame, you can see where my cursor is. So this is the chart of Google I've opened. So this is a daily chart. What is a daily chart? And daily chart we say that each candle represents one day, right? Like the red candle over here is of 4th August. The previous one is of 3rd August. Further previous is the 2nd August and so on. If you open the interval chart, see it's written over here, interval. You can see the various intervals or the various data intervals or the time intervals. If we go on the 1-week chart, then each candle represents 1 week. If we go on 15-minute, then each candle represents each 15-minute and so on. So this is the basics of time intervals. If you have cleared your level 1, then I'm sure that you are aware of this already. So I won't be discussing it in further detail. Working with multiple data intervals. So if you want to be a successful trader, then you need to always look at the larger time frame and you need to see if you are going with the trend or not. So let's see how we can do that. So let's start analyzing this chart on the weekly time frame. So this is my weekly time frame, which means that each candle represents 1 week. Let's mark key support and resistances over here. So this area over here, the triple bottom, the price took support over this area thrice. So I'm marking this as an important zone. Okay. And let's see for support regions. Okay. The price has been resisting this area over and over again. So I will mark my resistance over here. Something like this. The price also resisted this area twice. So I will also mark that like this. Now this is my weekly chart. I analyzed using my weekly chart. Now I will go on my shorter time frame, that is my daily chart, and I will also see how it played out over here. You can see that the price came, took support, went up, took support, went up, and here we are seeing a better analysis. Now what we can do is we can change these zones which we drew on a larger time frame into something which suits the smaller time frame even more. For example, like here I can see that this zone is way too big The price came here, took support, came down, so I can reduce the zone to this level, right? So I have edited the zone according to my smaller time frame. Similarly over here, I can see that the price maximum took support till here, so I am changing it to this, and I can also reduce this. Okay, here also the price took support somewhere over here. So that's how you are going to use multiple time frames. First, you are going to use the largest time frame and you are going to draw key zones, support and resistance zones, and then that is going to be on a broader picture, right? Then you go on your shorter time frame and there you are going to again edit your zones and make it more suitable to this time frame. You are going to refine your zones and make them even more better. Now you can go on even shorter time frame and take your trade according to your analysis. So that's how you are going to use multiple time frames. You start from the highest time frame and you come down to the lowest time frame. So while you change your time frame to a lower time frame, you are going to continuously refine your zones and make them even more relevant in the particular time zone. So it is important for you to see multiple data intervals because you need to make sure that you are taking a upside trade or a downside trade. Whatever the trade is, that should be basically in the direction of your primary trend or your larger trend. If your daily chart is creating higher highs and higher lows, if your daily chart is in an uptrend, then the trade which you are taking on a 15-minute time frame, you should make sure that you should only look for buying opportunities and not shorting opportunities. Why? Because you need to always make sure that you are in the direction of the trend. You need to make sure that you are in the direction of the higher time frame. So that is going to basically increase your probability of winning the trades. Charting multiple data sets. What is multiple data sets? Let's say I want to compare the charts of Google and Tesla, or I want to basically compare two charts and I want to see the price movements of two stocks. So how will I do that? So I've taken this chart from your book only of Wiley. So you can see the two charts right over here. The MSFT is the Microsoft and AAPL is Apple. So this is my price and this is my duration. So this is my monthly chart and this is the line chart. If I go on TradingView and if I want to see the line chart, then I can click on this where my cursor is and I can just change it to line chart. Then I can easily look at my line chart. So look at this. This is my Microsoft and this is my Apple. So I have plotted both the stocks on the same chart. How is this helping me? So when I do this, it is going to help me understand the correlation between the two stocks, and it is easy for me to analyze which stock is doing better or how much a stock is related to the other and so on. So this is definitely helping me perceive the data in a more better manner since this is more infographic, right? So we can see that Microsoft is also going up, but Apple is also going up at the same rate. But the price of Microsoft is more. But if you look at it, both are moving in the same direction. So this is showing me that they are highly correlated. They are highly related as both of them are moving together, right? That's what I can analyze by looking at this chart, by comparing both of them. Now let's look at this chart. Now I'm comparing BA, another stock, with AAPL, which is Apple. So are they related? They are not related at all. Here my BA is moving like this. It went up, then it was consolidating and then it came down. Whereas Apple has been steadily rising. So in this chart we can see that these two stocks are not correlated. They do not have any kind of relation between them. So when I plot two stocks on the same chart, this is helping me analyze the relationship between both of the prices and how similar or how correlated are they. You remember we saw what a scatter plot was in our level 1. See, that's why I've been always saying that even during the level 1 lectures that you need to be clear with the concepts in level 1 because these are the concepts which would be used in level 2 as well, right? It's going to be interconnected. So scatter plot was a chart which was helping us portray the correlation between two charts. and it used to make a linear line which shows the correlation between two stocks. So this is the first chart which we saw, that Microsoft and AAPL, Apple, were correlated, right? So in this, these dots are plotted in the scatter plot, which are the price of the stocks, right? And the closest related line is plotted between them, which shows the correlation. You can see that all, mostly majority of the dots are near to this linear line. So this is showing us that the dots are correlated very nearby, showing us that these two stocks are highly correlated. Whereas if you remember this, the correlation between AAPL and BA, there is no correlation at all. And if you plot their scatter graph, you can see that the dots are so much, spread apart. They are far away, showing us that there is no correlation between these two. So that is how you use the scatter plot. Let's conclude this chapter. We are done with this chapter. Conclusion. In this chapter, we have looked at the choice of data interval in chart construction. Most commonly, technical analysts construct a chart by gathering and summarizing price data at a particular time interval, whether it is monthly, daily, for each minute, or some other frequency. This allows technical analysts to study price movement over time, whether long-term trends or intraday price movements are of interest. In the next chapter, we consider ways other than time to sample and present price data in chart. Okay, so if I am an intraday trader and if I only trade on, let's say, 5-minute charts, then how will I do? Let me go on. Let me just go on Apple, since we've been discussing this a lot. So if I trade on 5-minute charts, then I will go on 15-minute and I will mark key zones on my 15-minute time frame, and then I will switch on my 5-minute and refine the zones even more. So that's how you are going to do your multiple time frame analysis. I hope you understood this video, and if you have any kind of queries or doubts, you can always drop me an email or you can comment in the comment section and I will come back to you. Also, as I have always mentioned, that if you are preparing for CMT, you need to always look at the real charts and you need to actually trade in the markets. Only then this knowledge is going to be useful for you, because trading is something which you need to do in the practical markets. This is my other channel. It is called as Trade with Sao. Here I post content based on the stock market only, and I also post my trading journal over here, which are basically recaps of the trades which I take on a daily basis. If you are interested and if you actually want to become a good trader along with studying CMT, then you can subscribe to this channel and you can stay tuned and watch the content which I post here. And I will also link the channel link in the description box below. Thank you.